Welcome back to the channel, everyone. It's me, Adam, and in this video, I want to share two different stocks that have been on my watch list for the better part of the year. However, both of them went up in price significantly before I had a chance to enter them, and I didn't want to chase them, and that ended up being a good decision, as both stocks have fallen back down to earth, and I want to see if they are at compelling valuations and prices to buy now, or if I should be a little bit greedier and wait or nibble or what. And I want to hear what you guys have to say as well with comments down below. So the first stock on that list would be Rocket Companies, which is a mortgage lending company. And the second stock or company being Lemonade, which is an insurance company. And what I really like about both of these stocks or companies is that they target millennials. And I think they're a little bit more popular in the States than they are here in Canada. And the reason that interests me as a millennial myself and knowing those around me is that we have a tough time growing up and taking responsibility. And these apps make it a lot easier for us to take on those responsibilities. So we'll be taking a deeper dive into both companies, both stocks, their fundamentals, financials, the technical analysis for both of them, their prices, and we'll see what's going on, guys. So before we do that, if you're new to the channel, welcome aboard. Hit that subscribe button here at Unlimited Options Investing. We talk everything from stocks, crypto, options, ETFs, precious metals, all the fun stuff. We are investing for the long term as well. As always, smash that like button, guys. Help me out, and let's get started. All right, first starting off with Rocket Company. So funny story, actually, on Friday, I had actually nibbled a little bit of a position without even knowing it because I had a limit order from months ago at $15, and it hit it. And I didn't even get a notification for it. So I was looking through my portfolio yesterday, and I'm like, wait a second, I have Rocket Companies in my portfolio, and then I remember that I had a limit order. I didn't even realize it was so low and that it was at $15 until I saw after market close yesterday. So that's a story for that. So anyway, it's trading now at $15. It has a market cap of 29.81, a 52-week low of $14.99. So I guess this past Friday, and a 52-week high at $43. And zooming out, we see that it went public last year in August at $25 and has been trading in a sideways channel since then. What you'll actually notice is that even though the 52-week high is at 43, you don't see that price reflected here at all. And that's because, as I'll show you guys in a moment, that it was a short squeeze at the time Wall Street Bets infused. And it was $43, I guess, intraday. And then it closed below probably even $30 because it doesn't even show here a close over 30. So I think it was around April, May times. But we'll take a deeper dive into that. This company probably did pretty well for themselves as the housing boom has been going on in the United States over the past year and a half or so since the pandemic. But moving forward, I don't think as many people will be buying houses. However, interest rates are expected to be going up over the upcoming years, which would be positive for the stock, but that's not going to be in the imminent future. So there could be a little bit more pain coming toward the stock in the short term. Taking a look at Yahoo Finance at the valuation measures, it has a forward PE of 10 and a price to sales of 1.77. So not too bad, not too expensive. Looking at their balance sheet at the end of 2020, they had total assets of about $37 billion and total liabilities at about $29 billion. And the short percentage is at about 8.96, which is nothing crazy to write home about. It's not nothing either, but I think it's a lot less than what it was earlier this year when that short squeeze occurred. And not something we want to see from a growing company, but again, they will be facing short-term headwinds, is that their revenue is expected to go down by 21%, but again, not because the company is doing anything wrong per se, but just the overall macroeconomic conditions with what's been going on around the world and all that. So it definitely is something you do want to take into account. And secondly, Lemonade is now $63.52. And taking a look at the max chart, it went public last year, July 2nd at $70. And we see the 52-week high at 188, which is about 3 times the price it is right now. And we see that back from February of this year. A lot of hyper-growth stocks had peaked. And since February 12th, when it was $164, it has cooled a sweet 61.25%. Its market cap a lot smaller than Rocket at $3.91 billion. And taking a look at the valuation measures, it doesn't seem like it's profitable yet at a forward PE of negative 16.33 and a price to sales ratio at 43.45. So it doesn't seem like the stock is that cheap at the moment still, but also taking into account that it is a hyper growth company. And unlike Rocket Companies, the revenue is expected to grow 63% next year. And as a much smaller company than Rocket, they have total assets of $828 million and total liabilities at $287 million. And taking a look at the candlestick charts on the daily time frame, first off with Rocket, and we just can't ignore this massive candle over here, guys. So when the short squeeze happened, it was back in back in March. I thought it was in May time, but I guess March time. Yeah, you see over here, guys, this price went from $20 to $22, $23 to about $40 in 3 sessions. On March 2nd alone, it went from 26 to 40, and then the next day it went from 35 to 26, and the run was over. And since then, it's pretty much been a slow bleed all the way down to an all-time low of $15, which we stand at today. So as the company has only been trading for 1 year, even Lemonade, the same idea. We don't have as much information to refer to, but we are at an all-time low. We could be the start of things to come. Maybe not. We could just be forming a base around this $15 mark. We have to see how it trades over the upcoming, let's say, couple of weeks. But again, we've rarely been below the $16 mark, I think, ever. So we might just pop right back above it and maybe rebound back into this channel between, let's say, $20 and $16. And we could probably even draw one more channel as well, maybe around the $24 mark, where just from observing the stock over the past like half year or so, it has been really trading in these ranges from 20 to 24 or from 20 to 16. And for the first time, we're now below it, so invest at your own risk. And taking a look at Lemonade, and this one has been more of a roller coaster than Rocket. So scrolling back to last year near the IPO, it jumped up to about $90 and crashing down as low as about 45, so 50%. From there, jumping up, 3-4 times all the way up to 185, and then subsequently crashing back down all the way to 60, and then rebounding back up back in the summer to 112, and now crashing back down to those same levels. So this one actually gives us a little bit better of a picture than Rocket, as with Rocket companies, we hadn't been as low underneath those pre-existing channels, whereas with Lemonade, we've been here before as early as May of this year. So this could be an area of where the buyers could begin to step up, but we've also seen from last year, and we can draw a few more channels over here. So we could draw a line, let's say maybe at $60, where there could be buying pressure, and then we could draw another line over here, let's say $45, which was around the all-time low from last year. That could be the next channel. So if we do break that $60 mark, then we could be trading maybe in this $15 range between $45 and $60. So it could potentially be a good idea to nibble, but there could be better opportunities coming forward, but easily jumping back to that 80, 90, 100 level mark at the very least. So this stock, again, being very volatile, we don't know how it's going to react. So similar to Rocket companies, invest at your own risk. So both stocks are well off their all-time highs from earlier this year, and if you're looking to start a position in either one of these companies, that is a good thing, because the one thing that is certain in life and in the stock market is the lower the price of a stock, the less risk you are taking and the more potential gain that you could be receiving. Because if you get the same stock, let's say you buy Lemonade at $100, the one thing that is certain is that you're taking on more risk than someone that bought it at whatever it is right now, $60, and you're for sure going to have less return on your investment than someone that bought it much cheaper than you. So take that into account when you're having a red day in the stock market and your stocks are red. It's only giving you an opportunity to get into the stocks at either cheaper valuations, less risk moving forward. Let me know in the comments below, team, if you're interested in Rocket companies or Lemonade. If you use either one of their services, let me know if you're interested in investing or trading them. As always, subscribe, like, and I will see you guys in the next video.